I have a target of 3,400 on gold, a target of 75 on silver for this year. And I think they'll run beyond the top of the stock market. They started later. They're coming from farther behind. They probably have further to run, and they can run into the early part of the bus. There is plenty of room in the metals and the miners, in copper, in industrials, in materials, um, even home building, which I wasn't sure whether they were running out of gas, and they may be because they're starting to see inventory build.
Gold had an exceptional 2024, surging over 25% to achieve its most significant annual gain in 14 years. Asia, led by China and India, the world's top consumers, accounts for more than 60% of global gold demand. Meanwhile, silver started 2025 on a firm footing after a 21% rally last year. Although silver lagged behind gold in hitting new record highs in 2024, partly due to economic challenges in China, its long-term outlook remains optimistic. The key question is whether silver can break through the $35 mark or higher this year. David Hunter is particularly optimistic about precious metals, forecasting a price of $3,400 for gold and $75 for silver by the end of the year. He believes their rally has the potential to extend beyond the stock market's peak, as these assets began their upward trajectory later and have more ground to cover. As we move into 2025, blending emerging investment strategies with traditional methods will be key to navigating the complexities of global markets. Factors such as uncertainty around the Federal Reserve's policies, the potential for trade wars under a second Trump presidency, and China's efforts to stimulate its economy could all contribute to the continued appeal of precious metals. According to the World Gold Council, Chinese demand for gold jewelry fell to its lowest level since 2010 in 2024. Additionally, the People's Bank of China slowed its gold purchases, contributing to a 19% year-on-year decline in overall gold demand. Hunter sees substantial opportunities in industrials, copper producers, precious metals, while advising caution with defensive sectors and energy stocks. We're about to explore the video, but first make sure to subscribe and hit the bell icon to keep up with our newest uploads.
Um, and I'd include industrials, um, the copper producers, COPX, which is the ETF for the copper producers. I think it's selling around 38 or 39. I have a target of 75 for that. So that's almost a double.
Wow.
And again, that's it, again, talking about the precious metals, I have a target of 3,400 on gold, a target of 75 on silver for this year. And I think they'll run beyond the top of the stock market. They started later. They're coming from farther behind. They probably have further to run, and they can run into the early part of the bus. So that might be a 9 month story. It might happen in 6 months, but it might take nine. But you're at $30 on silver, and I'm saying 75. So there's a lot of upside there, and that's the metals. The miners, if you get those kind of moves, 34 on gold, 3,400 on gold, 75 on silver, I have pretty aggressive targets on the ETFs. SILJ is the junior miners, which has been a doggy ETF for a long time. People are disappointed in it. It's selling at 10 and change. I think it can get to 35. Um,
Oh.
SIL is selling, I don't know where it is, low to mid 30s. I have 75 on that, so that's more than a double. GDX, the gold, I have it going to 65. That's selling in the low 30s, I think. GDXJ, which is selling up around maybe 45, 44. I have that going to 100. So there is plenty of room in the metals and the miners, in copper, in industrials, in materials, even home building, which I wasn't sure whether they were running out of gas, and they may be. There's a chance that if the rates fall as hard as I think they can from, high fours, mortgage rates are up, well over 7 now. If they fall back down to under 5, you could stimulate quite a bit of activity this spring in those that thought they missed the cycle. And you might have one last fling in the home builders where they could have a reluctant to invest in right now are the more defensive areas. Not that they won't go up, but I don't think they'll go up nearly as much. The utilities, consumer staples, and even the energy. Oil's had a little bit of a run here, but I still think it's mostly on the downside this year.
Wow.
So I'm not a big believer in the oil stocks.
The S&P 500 achieved a total return of 25% in 2024, including dividends, building on its impressive 26% gain in 2023. This marked only the second time since the index's inception in 1957 that it delivered consecutive annual returns of at least 25%. The previous instance occurred during the dot-com boom, with the index surging 33% in 1997 and 29% in 1998. Driven by the meteoric rise of technology stocks to unprecedented valuations. Hunter foresees a significant 80% bear market following the anticipated bust, predicting that the stock market may not reclaim its current highs for decades. He underscores the importance of protecting gains during the market's ascent and making a timely exit before the downturn intensifies to avoid substantial losses and secure a strong position for future opportunities. Now, let's redirect our attention to a video.
I'm pretty confident in saying we're not at the top. There's another leg to go, and I think it's going to be a pretty fast leg. And then the other side of the mountain is where you got to be very careful, because if you can preserve your assets, whatever you make between now and the top, if you can preserve those assets, get out before it rolls over or before it rolls over much, and not ride it all the way back down, you're in much better stead for when the bottom of the stock market and the bottom of the bust hits, because that's the other big story, which is post bust. On the other side of the bust, after an 80% bear market, you probably aren't going to see the highs in the stock market that we get to this cycle. So if 7,500 is the top of the cycle, next cycle you might only get to 6,000. However,
Yeah.
if you go down from 7,500 80%, so let's say you're at 1,500 at the bottom, you could quadruple your money. The market could quadruple out of the bottom, go up fourfold, and you'd be at 6,000. You'd still be well short of that 7,500, right? So I think the highs of this cycle in the stock market, at least the U.S. stock market, are going to be the highs for the next decade, probably 2 decades at least. And but if you buy at the right time after the bust, that doesn't mean that there's no opportunities. In other words, if you buy down near the bottom, or go back in down near the bottom, there's going to be a couple of years there where the stock market does very well. The cyclical bull market it just won't be to new highs. And next cycle is going to be an inflation-driven commodity cycle, where oil might go from $30 in the bust up to $500 by the early next decade. I mean, that's a huge run, and oil stocks will obviously be big beneficiaries of that. Gold could go to 20,000 next cycle by the early 2030s. So if gold goes to 3,400 here, backs up to 2,100 in the bust, and then goes to 20,000, that's almost a tenfold increase. If you buy in after it gets hit in the bust. If silver goes to 75, comes back down to 25, and these again, I'm just throwing out numbers that are kind of maybes. And then goes to 500 by early next decade, which is what I think it can do in the commodity super cycle. 25 to 500 is a 20-fold increase.
Yeah.
And that's just the metal. Imagine what the miners in that kind of environment, even bad mining managements can't blow that.
For investors, 2025 offers a unique opportunity to adapt strategies in response to evolving market dynamics. As traditional investment approaches converge with digital innovations, the significance of gold and silver as key components of a diversified portfolio remains paramount. These precious metals provide stability amid uncertainty, underscoring their enduring value in the face of economic and geopolitical shifts. The outlook for silver in 2025 remains cautiously optimistic. Despite short-term challenges, Its critical role in green energy and enduring haven appeal continues to support its long-term bullish prospects. Similarly, the potential for geopolitical tensions, including the risk of trade wars under a second Trump presidency, is expected to reinforce gold's position as a reliable hedge throughout the year. With predictions of gold reaching $3,400 and silver hitting $75 this year, do you see precious metals as a safer bet in today's uncertain economic environment? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.